Two confluences that I always look out for each time that I want to take a trade. And I'm going to be using a live trade example to show you these two confluences in this video. But before we go into that, if you're seeing me for the very first time, my name is Divine and I'm a forex trader. What I basically do on this channel is document how I trade and as well show you the mindset behind my strategy. If you want to be seeing content like this, I want you to smash the subscribe button, like this video, and drop a comment. I'll be right back. I'm going to be using GBUSD to show you these two confluences. And these two confluences requires patience and confidence. And the way I'm going to show you is basically to just do it the way I normally do it if I want to analyze a trade and take the trade, right? I'm going to be doing every step by step that I normally take if I want to execute a trade. But these two confluences are being identified on the 5 minutes time frame and on 15 minutes time frame. But we have to understand what price is doing on the higher time frame so we can use that information to know what we're going to do on the lower time frame. And in this case, I'm simply going to be going to the daily time frame to see the overall picture of what's going on daily time frame and use that information to execute on the lower time frame. Now, if you look closely, we have to zoom in properly for us to see the bigger picture of what price is coming from and where price is heading to. And if you look closely here, with our trend line, we can basically see that there's a support level here that price simply broke out from. And there is likewise a resistance level from this point, right? That means the trend or the support and resistance is simply telling us that price was in an uptrend, but price broke below the support level. And this support level has basically turned to a what? A resistance key level. And the current place where price is simply the new support key level. Now our interest now is simply on these two key levels, right? Let me remove this support, let me remove this resistance. Our interest now, our focus now is simply on this support key, on this resistance key level and on this support key level. Remember, this was a support that turned to resistance, and this place is now acting as a resistance key level, and here is now acting as a support key level. Our interest now is simply understand how price is behaving from this resistance key level to this support key level. Then we can know how to flow price to where price is going to. And for us to do this, it has to be on the 4 hours time frame. Now I'm going to zoom out properly so we can see clearer what price is showing us on the 4 hours time frame. Remember, these two lines simply means our resistance key level and our support key level. Now, if you look closely, we are only paying attention from this resistance key level and this support key level. And if you look closely, when price got to this resistance key level, price broke structure. And here is simply where price broke the structure, right? That here is simply a swing low, here is a swing high, and this swing high give us this swing low, right? That means from here to here is simply one movement, and price basically give us a retracement, which is simply here, and this retracement give us this low. That means here is the next high that gave us this low here. Remember, price broke below a support key level, and that support key level became a resistance key level. And we are working with that resistance key level at this point here. And I'm saying to you that when price got to this resistance key level, price broke this low here, right? And this low gave us this high that gave us this low here, meaning price in a downtrend. Now our interests now have changed from this key level here to becoming this particular swing high here and this swing low. Now if you look at this swing high and this swing low, our supply zone is simply at this point here, right? At this point here, that we want to simply see price come back to this point here, and then we sell from the higher time frame perspective. That means we want to simply wait for everything to align very well at this point here, and then we look to sell. And before we can sell, we want to simply understand how to refine this particular zone to become a point of interest, because we can't just sell from a supply zone. We have to refine it to become a point of interest so that we can know the particular point we are likely going to sell from. And for us to refine this point of interest, for us to refine this supply zone, it has to be on the 1 hour time frame. On the 1 hour time frame, for us to refine this zone, we have to simply represent this full zone with a specific candlestick. It can be a doji, shooting star, any candlestick at all that you like. In this case, I'm simply going to be using this particular candlestick here as my point of interest. Now, having understood that this point of interest is going to be valid because there has to be liquidity that is likely going to hold this place for itself. And if you look closely, price has been moving to this upside. And as price is moving, price is engineering liquidity that price is likely going to come back for. That means there's chances that this particular point of interest is likely going to hold. But what do we do next? Let's try and understand how price moved from this particular low to the current place price is. Then we can simply identify an entry point. Now, if you look closely at this point here, when price was moving from here to this place, price was giving us swing high and swing low. In this case here, this point is acting as a swing low, and that swing low give us this swing high. And this swing high give us this low. That swing low give us this high. Right? This high one, this low give us this high. Now notice how price has been generating liquidity at this particular point here. That as price is moving to the upside, price is basically generating liquidity. And if you look closely, this is a low, right? This is the last low on the 1 hour time frame. And what we want to basically do now is to simply go to the 15 minute time frame and look for possible entries, because we have to simply identify an entry from the 5 minutes time frame or 15 minutes time frame, which I'm going to be showing you right now in this particular video. Now, on the 15 minutes time frame, we want to simply understand how price has behaved from the last swing low to the current place price is. Remember, this is the last swing low on the 1 hour time frame, and this last swing low also induced liquidity. That there will be a point where price is likely going to come back and take out all this liquidity before price continues to the upside, right? There will be a point where price is going to sweep the liquidity for price to continue grabbing liquidity. In this case here, price is simply engineering liquidity. Now, for us to know how we can join price to where price is going to, we want to simply understand that price is simply heading to this point of interest here, right? Price is simply heading to this point of interest. We can basically do two things right now. One is to simply wait for price to simply get to this point here, and then we'll look for a sell opportunity. Or we can simply look for a buy opportunity and follow price to buy to where price is heading to, that point of interest. And if we were to simply join price to that point, we can simply identify that this place is simply the last swing low on this 15 minutes time frame. And here is simply the last swing high. And if you look by your left hand side, you see that price took out liquidity, meaning there was an equal high here that price took out. Price took out liquidity, and price gave us this low and this high. For us to sell, we want to simply see price take out this low here, give us a retracement, and then we look for a sell opportunity. But a sell is going to be confirmed if price gets to this point of interest. Now, because price haven't gotten that point of interest, We can either watch price go to that point of interest or we follow price to that point of interest. And for us to follow price to that point of interest, we want to identify a point of entry for us. And for us to identify that point of entry here, we are simply using this last low and this last high here. And then look for lower time frame liquidity on the 5 minutes time frame. And if you look closely here, you see that this place is simply a point of liquidity. Right? This place is simply a point of liquidity that if you want to buy, you can simply wait for price to simply come back into this level here, and then we'll look for a buy. Our stop loss above this particular point here, our entry right at this liquidity point here, and our take profit simply at this point of interest for a 1:4 risk to reward, which is a very good risk. That even if price stop you out, because you follow this your plan step by step, you don't have anything to lose. You do not actually lose. The practical liquidity, yes. The practical inducement, yes. Did you identify a good stop loss? Yes. Did you identify a good exit point? Yes. Now, because you've understood this particular step-by-step method and you've gotten your entry at this point here, we want to simply wait for price. You want to simply follow price to get to this point for a buy. And if price come back to this point, then we can look for a sell opportunity if price presents one. Because we're only looking for opportunity, we are not certain of what price is going to do. For instance, I don't know if price is going to sell to the downside and stop me out. I don't know. But I can never know until I take the trade. I don't know if price is going to go to the upside. I will never know until I take the trade. So it's all about following step by step, understanding the steps, being patient for price to form. For example, I have to be patient enough for price to simply sell down to this point and then look for a buy to the upside. Simple. Patience and the confidence to execute that even if price stops me out, I don't really care. So long as I follow my rule, identify what I'm looking for, identify liquidity sweep, identify inducement, and I'm taking the trade regardless of the outcome. So these are the two confluences I normally use to enter my trade: liquidity sweep and swing highs and swing low. That will be all for this video. I will see you in the next one. Peace.